Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings so you don't have to. Today we're diving into the latest 10K report from Burlington stores, and let me tell you, there's more than just discounted clothing in this document. We'll uncover if they're really making a profit or just shuffling inventory around at rock bottom prices. First off, the official name, Burlington Stores Inc. This report is their annual checkup with the SEC, basically showing how they did financially over the past year. The report covers the year that ended on February 1st, 2025. It's like their yearly school report card, and we will look at it and tell you what we think. Burlington is an off-price retailer, meaning they sell brand name stuff for less. They started out selling coats in New Jersey, and now they've got over 1,000 stores in almost every state. They're all about chasing the latest fashion trends and getting merchandise at bargain prices. They're planning to nearly double their store count, aiming for 2,000 locations. That's a big move, and it depends on finding good locations and negotiating the right deals. Here's a quick look at where their money comes from in terms of percentage. Ladies' apparel is 21%, accessories and shoes are 27%, home stuff makes up 20%, men's apparel 17%, kids and baby stuff 12%, and outwear accounts for just 3%. This basically says they're a big company, so they have to follow certain rules when filing their reports. One risk they mention is how much they rely on other stores in the shopping centres where they're located. If those other stores close or see less traffic, it could hurt Burlington's sales too. Another risk is that they might not be able to keep up with everyone's expectations on things like environmental sustainability and social responsibility. It's a growing pressure for companies these days. Like almost every company, they worry about cybersecurity. If hackers break in and steal customer data or mess up their systems, it could cost them a lot of money and damage their reputation. The audit committee is responsible for keeping an eye on their cybersecurity strategies and risks. They utilize a cross-functional approach with senior management, technology, operations, legal, risk management, internal audit, and other key business functions to address risk. Like most retailers, Burlington's business changes depending on the time of year. They make more money in the second half of the year, which includes the back-to-school and holiday seasons. The report says that the market value of their stock held by non-affiliates on August 3, 2024 was roughly $15.8 billion. This is just an indicator of how much investors value the company. Burlington has been buying back their own shares, spending millions. This can boost the stock price and return value to shareholders. They are focusing on several things to make even more money, and it includes increasing existing sales. Okay, now let's get to the real stuff here and see how they are doing based on the numbers. Over the last 5 fiscal years, the cumulative total stockholder return on BUAL has grown by 30.56%. The S&P 500 index has grown more in that time at 87.27%, as well as the Dow Jones, who grew 73%. This data is a sign that there is an opportunity for the company to better allocate capital. Net income, the real profit, was $503.6 million. What is more important and interesting is adjusted net income, which takes out some of the one-time costs that are not normal to the business and paints a more accurate picture, which was $527.90 million. Net sales improved $907 and at $308 million, or 9.3% to $10.61 in 2024. More stores will mean more earnings, and 2 stores since the end of fiscal 2024. More stores will mean more earnings. Selling, general and administrative expenses as a percentage of net sales decreased to 33.4% during the fiscal year ended February 1, 2025, compared to 33.9% during the fiscal year ended February 3rd, 2024. The decrease was primarily driven by supply chain efficiency initiatives. They generated $69.3 million of cash during the year, ending with cash of $994,743 on us. Net cash provided by operating activities amounted to $83.4 million, meaning that money is flowing into the company. But net cash used in investing activities was $882.3 million, so that money was spent on assets. They are currently buying their stocks back. One key risk is that their debt payments depend on how well they do in the future, which they believe they will be able to offset. Okay, so what's the big picture? Burlington had a pretty good year. They're making more money and are managing expenses reasonably well and have a good handle of internal control. One potential area for worry is their large amount of anti-takeover measures. They could discourage, delay, or prevent a transaction involving a change in control of the company, even if doing so would benefit our stockholders. Based on their evaluation, their principal executive officer and principal financial officer concluded that their disclosure controls and procedures were effective as of February 1, 2025. They seem to be extremely diligent about security by utilizing people with over 20 years experience. So overall, Burlington Stores seems to be heading in a reasonable direction. They're expanding their store base, focusing on new ways to chase in the sales trend, and seem to be looking closely at expenses. But in my opinion, there are a few points that could be worrisome to potential shareholders. On a positive note, the company is very cash heavy and has low inventory. They know where they are going. Thanks for tuning in. If you found this breakdown helpful, remember to smash that like button, subscribe for more corporate insights, and tell me which company I should decode next in the comments.